The Second Bank of the United States, chartered in 1816, had provided some measure of central regulatory discipline, but by the early 1830s it had become the target of President Andrew Jackson, who viewed it as a corrupt instrument of Eastern financial elites and foreign creditors. Jackson's decision not to renew the bank's charter in 1832 and his subsequent order to remove federal deposits from it and distribute them among favored state banks, the so-called pet banks, removed the principal check on the expansion of credit. State banks, flush with federal deposits and operating under minimal oversight, dramatically increased their lending, much of it collateralized by land, whose value was itself rising on speculative sentiment. Between 1832 and 1836, the number of state-chartered banks nearly doubled, the volume of banknotes in circulation exploded, and land sales on the frontier soared to extraordinary levels. Speculators purchased vast tracts of federal land with paper currency that was, in many cases, backed by little more than confidence. The crisis was triggered by a combination of tightening credit from Britain, which had been financing much of the American expansion, and Jackson's Specie Circular of 1836, an executive order requiring that federal land purchases be made in gold or silver rather than paper currency. This single policy change exposed the fundamental fragility of a credit system built on paper promises. Land values fell as demand collapsed. Banks that had extended credit against inflated land prices found their collateral worthless. And a wave of bank failures swept the country in 1837. Hundreds of banks suspended specie payments. The economy contracted sharply, unemployment rose, and the depression that followed lasted in varying degrees until the early 1840s.